The following video is for entertainment use only and should not be considered financial advice. Please do your own research. Hello guys, and welcome to my January portfolio update. It's been an exciting month this month. So at the start of the month we were down at 9.5%, and then as the new year come in, there was a bit of a climb and a little bit of a dip and a bit more of a climb, and then there was a dip, and then I was waiting for the dip as like the last time that showed me these sort of dips in the middle of the month, and so I waited for that, and then I stuck some money in, and then it's climbed back up again. So and I've sort of finished in the month from what, sort of 10%, so not too bad. So about a percent increase, which is really good. Top 10, number 1 still BP, number 2 Shell. A little bit of a change in here. Arch Daniels dropped down, Chevron's come up, so not too much change there, but fairly stable. So this month I've sold my iShares FTSE 100 ETF as the price went up. I sold that here somewhere in one of these, just before, I think I actually sold just before that peak, right at the beginning of the month. It was in profit, so that's one out of my hold to sell pie gone. And yeah, and let's do the price first then. So hold to sell pie, so that went, and in its place I have placed Direct Line, and this ETF here, I'd bought the wrong one, so it's just put it in there because it's running at a loss of a couple of pence. I'll just put it in there, so it will get sold. But that's really a mistake one, so that's not really an add to the portfolio. It was just a mistake by fat fingers. So I've swapped out, sold the FTSE 100, the iShares FTSE 100 ETF, and replaced that with Direct Line. Why have I put Direct Line in there? So they've announced that they've cut the dividend for the final dividend of 2022. So, and there's no news out there that says that they might reinstate it. So at the moment, I'll put it in there as a hold. The share price dropped quite significantly as well because of that news. So again, it's just in that pot there. If it decides to reinstate its dividend and that, I might take it out, but at the moment it's in that pot till further notice because it doesn't fit with strategy. Okay, so just a quick overview of my share prices or my holdings. What jumps out as a nice one, nice winner, nice loser. Apple's recovered. That was good. Aviva took a bit of a hit as well because their share price fell when Direct Line announced that they were cutting their dividends. Their share price had a bit of a dip as well, but yeah, still not looking good. New company, I've added this, so Bluefield Solar Income. I've added this to the portfolio to align it with my dividend strategy of getting it to over 5% dividend yield this year. So this has a 5.9% dividend yield. It's a fund. Let's see how it goes. I've had it on my watch list for a while because I've been wanting to add some more energy stuff, and particularly green energy, because solar, I've got my own solar panels on my house, so I'm quite passionate about it. So let's just see how that goes. But so far, pretty good. BP, I might cash these out at some point this year. I think at £5.50, £5.80 kind of mark. If they hit that sort of mark, I might sell out of them. I don't know. Still thinking about it. Caterpillar's had quite a wild ride this month. Put it on the month chart, it's really good to see. So beginning of the month, 238, peak 264, massive ups and downs. So yeah, they've been good. Chevron again, thinking about selling these out as well. It sounds like I'm ditching my oil, but I might be. I'm not ditching them. I might just cash in on the profits, the gains I've had on them. But we'll see how that goes. Anything else that's really jumped around? Spoke about direct line. Did I add this one or did I already have that one? I think I already had this one actually for some reason. Just a quick check. No. So yeah, so this is another new company that I've added in. Greencoat Energy, again another green energy in the UK. Again for the dividend, because it's got dividend yield of 4.83, which is good, better than some of my lower ones. Again, it's to boost my portfolio overall dividend yield up to above 5% this year. That's my target. Anything else to speak about? So I did put in about £350 this month, and I did quite a bit of self-balancing rather than using the Trading 202 balancing section. So, and I can do that throughout the year. Because my plan this year was to put in £300 a month, but cost of living, inflation, all that kind of bad stuff that we're all suffering from, I'm only realistically be able to put 200 in. So that should give me 2 companies a month where I can self-balance at £10 a month. See if I can sort of balance my profile out a little bit. So with that. Anything else to write home about? There was another company I added. That's a bit of a not controversial. It's really high risk. Is it a bit risky? A bit risky. That's a better way of saying it. Oh, Rolls-Royce. Rolls-Royce is doing really well, and with the cost averaging, I'm up 18, nearly 19%. So I made a bit of a peak in there. I think that was the same price that was last year. What was that? Yeah, sort of £1. Yeah, about the same price. So the price sort of done this full circle, but my cost averaging has really put me in profit with that, so I'm happy. What else we got? Shell, I'll keep these forever, I think. Love them. I think they're at my oil stocks. Shell's my favourite. What else is having a Tesla's having a beat in? Ooh, that's covering a little bit, I suppose. Shell, Tesla, it's a long-term hold. Well, it's to the end of 5 years. And this is a new addition. This is what I'm talking about. So this is slightly riskier in terms of what it is. So it's not something I've had it on my watch list for about 2 years. I'm denied whether to put it into this portfolio or not. It's a monthly paying dividend company. It's a closed-end fund based in Guernsey. It's got a really high dividend yield, which is really good. It's 8.3%. It's really good. If you look at some of the trades, for example, let's do 1 week is better. There's not a lot of volume trading this. That's why we have lots of flat lines, and the sales only go through at the end of the day. So, like I said, I've had it on my watch list for quite a while, since it was up here actually. It was nearly £1 share, so it might be back here somewhere. Oh, way back, yeah. So let's put the min max on, it might show better. Yeah. So I've had it back here in 2020 somewhere. Yeah. I thought I'm quite like the idea behind it. So I know it's a bit risky. I didn't want to put too much money in it. But then it took a bit of a dip last year, and I was thinking, no, it's not a good idea to do. And then it bottomed out sort of back end of last year and started to come up, and I thought, okay, I'm going to dip my toes in it. So roughly, it pays roughly 0.5 pence per share. The shares are relatively low cost at 76 pence. So I'm kind of taking a bit of a risk on it and just going for it. Should hopefully, let's see how it pans out by the end of the year. Doing that. Stuff's doing okay. Like I said, I sold out the iShare one. This is the one I bought one share by mistake in the wrong one, so I didn't look what I was doing. So that's in my hold to sell pile, but that's okay. And yeah, overall, pretty good month. Quite happy where I am. Portfolio sits really well. It's in a nice return, and I wasn't expecting it because I'm expecting this year to be quite challenging, and the first month's been very explosive, so that's good. So we'll go over to the dividends and just see what paid out. So new year, new sheet. So one of my favourite monthlies, AGNC, paying out. I've actually had £10.54 in total from that. That's good. So the target again, I've said this a couple of times now, I'm going to, as quickly as possible, get this to £1 a month, and then focus on the next one, which I think is Prospect Capital, getting that £1 a month, and then so forth and so on, because I really want to get my dividend yield above 5% this year. Automatic data processing paid out, which is good. The Bank of Novus, I can't pronounce the last word at the minute, my brain's gone dead. Paying out nearly £1, which is good. This is quite a healthy stock. It's got good. It's just really good at the moment. If I was to recommend one to buy at the moment, that would be it. Out of all my stocks. Cardinal Health paid out 68p, which is good. Chubb paying out. So I'm not going to say is it good, is it bad? Because they're all good. Every time it gets paid out, it's good for me. I like to see those notifications keep flashing up my phone, but I don't want to keep flicking between the two sheets, going back to 22 to compare it. So benchmarking it for the month, first quarter, and then I'll say good or bad after that, I think. Franklin Resource paid out. Gladstone Land. Still disappointing. GlaxoSmithKline paid out, which is really good, 30p. Horizon, another one. This is a monthly dividend one, quite like it. Illinois Toolworks, did okay. I got dividends for my iShare one that I sold out, so I've graded that out because I have sold it, but I have kept it in here. One, I got a dividend from it. Two, it kind of keeps track of then the past dividends and all my other charts are linked to it, so I don't really want to delete it out. So it's just I've just graded it out for now. My iShares, JP Morgan government bonds paid out. Kimberly Clark paid out. LTC Properties monthly dividend paid out. Main Street Capital, another monthly dividend paid out. Metronics paid out. This company, well, it pains me. It does pain me because the share price goes really bad, the dividends ain't great, and then it sort of makes a recovery. Just I think, well, I'm gonna get rid of it, and then it makes a recovery and keeps itself alive in my portfolio. I like it. National Grid paid out, which is okay. Pepsi Cola, Pepsi Company, should I say, did really well. Another couple of my ETF monthly payers. One of them's doing really well, actually. I think it's this one. It's doing really well. This one's share price is not doing great, but dividends okay. Prospect Capital, that's another one of my favourite monthly income paying dividends ones. So again, I'm going to try and get that to £1 as soon as possible. So I really need that snowball compounding effect to start taking place to try and subsidise the fact that I can't invest as much as I'd like. Reality Income, great one there. Paid out. I got a lot paid out this month actually, more than I was expecting, if I'm honest. Roper Technologies paid out 11p, that's okay. Severn Trent paid out, and Shawby Communications paid out. Stag paid out as well, which is good. Cisco's paid out. T Rowe Price paid out. The renewable infrastructure. This was my first dip into renewables is as an individual rather than my global clean energy one. That's paid out. quite happy with that really. I'm okay with it. It went down a little bit last year, but it's making recovery. So it goes. New company, obviously, nothing there yet. For the other Vanguard, my Vanguard FTSE 100 ETF, which I am keeping, it also paid out. Pretty much all my Vanguards paid out, if I'm honest. Mentioned them all. It's all paid out. VIC Properties. Kind of do want to sell that one. I think. Don't know. And Walmart paid out, and Whitestone paid out. So for the month, I got £16.53 in dividends. Compare that to January last year, which I think is £5.50. Yeah, £5.50. So it's £10 more a month, which is good. And hopefully it follows the same trend where it sort of doubled and then stayed up above it. So let's hope 23 stays the same way. Because for my target, my predicted target, I think I need to average about £26 a month. So a little bit short of that. But anyway, so that's what let's go before we go on the big numbers. The ISA. Oh, so I deposited £374.93. So that was made up from £200 out of my personal bank account. I had my feed-in tariff from my solar panels payout, and I put the spare change from that in here as well. And what else did I have? I had some dividends payout from companies from my other portfolio, which I decided I wasn't reinvested in back into that company because I'm saturated state on that, and I want to just hold what I've got and start drawing income and using that in another company. But again, the spare change from that came in here, and then there was something else I got paid out that I chucked a spare change in as well from. I can't remember what it was, but it made up this 374.93. So I've updated the interest rate charge. So because the ISA is now paying 4%, so I would have gotten £19.96 in interest, which is more than the dividends I got. Hence why I need to. That's why I'm trying to increase my dividend yield, and therefore increase my monthly dividend. But this year the ISA might win. It's lost the first year and the second year. The third year I think it might win, but I've still £1,000 up because that's at 6,007 or £6,007. Okay, so transfers it over. So I'll go that number of transfers over. So my value at the end of the month was £7,070, which feels good because there's £1,000 more in the ISA. But not only that, I feel like I've been stuck on 6k and it's taken so long to get to 7, and it's just been disheartening. But now it's finally, I feel like I've broken a ceiling there. Include the dividend reinvestment this year, so I'm currently running at 18.77% up this year, which is a massive number. Last year I think it was just about 7% I did all year, and it's still got a long way to go this year, yeah, but at the moment we're running 18%, but this time last year I think I was at a loss of a couple of percent. So it's really good. So that just shows the volatility of the market, or the market increase this month. That's just for me. I just track that how much I'm getting year on year dividend. It's not really meaning anything. So don't really look at that number. That's just for my entertainment. Obviously, I've got my £16 dividends. So my dividend yield now is sitting at 3.6%. So I've still got another 1.4% to go to meet my target by the end of the year, which is okay. And in total, I've had £222 in dividend, which is nice. Average dividend per month is low because it's the first month. Capital growth this year, so yeah, I've made £73 on what I've invested. That's not bad, is it? You think 375 quid I've made if I'd have sold all the shares I'd bought in this month now, I'd have made 75 quid. Easy money. Anyway, total capital growth, yeah, £896. Every money deposit. Okay, so let's have a quick look at the front sheet and how my dividends are trending. So these are the dividends, all the dividends I've had since I've opened the portfolio. Obviously, there's a couple of spikes. Normally around the interim dividend, so my 6 monthly dividend payers bi-yearly payout, sort of most of them pay out May and September type thing. So there's always a spike there, and again there September is a spike, and then you sort of see the same thing here. So May time is a spike, and September there's a spike. But all in all, the trend line's obviously exponential, and I have some good months, and then I have some just below that target. But as time goes on, that will start to flatten out a little bit, but it's in the right direction. Predictions. So yeah, I've got a predicted dividend target of £312 and a capital growth predicted target of £200, and at the end of the year I should be at £10,000. So not bad going. This is going to be a hard challenge because the predictor, this model I'm trying to build, when it predicts that dividend for the year this year, it's already with the money I was planning to deposit in with it. So, and I don't actually put it all in one lump sum. I do it monthly, so this might be a challenge to meet, but I think I can do it. And yeah, so I'm now using the average growth rate of the portfolio rather than that year growth rate. Otherwise, for the rest of the model, to predict the rest of the model. So, can I do 50k in 5 years? Not likely. But I think it's because but how long will it take? About 13 years. So, all in well, doing okay. I think I'm enjoying it. There's been a lot of videos at the moment on YouTube about investing platforms and which one's best, and quite a few people are pushing Trading 212, and Invest Engine as well. There's another one, Moneybox. So they're all saying the same things really, and I have to kind of agree with them because Trading 212 platform is really good for me. It gives me the commission free, and yeah, there is an FX fee you have to pay, but it's very small. But it gives me the opportunity to experiment, buying companies that I can put a small amount of money into, show you guys what returns you can get from it, and it also helps me out as an experiment because I could do it without the fees. So I'm a lot more bolder with what I do in here. I could put some money in here. It's all working out. It's all actually really good. So I'm actually learned quite a lot doing it this way as well. So they do get a free share. So if you're interested in a free share, there's a link I'll put in the description below, and claim a free share and I'll get a free share. So last year I got one Microsoft share, but it went into my normal account, not on this ISA. So I sold that and I rounded up to £10 and I donated that to the Iris PCA to them this year. So this year going forward, hopefully I'll get some more people want to use that code, and any money, any free shares I get, I will sell them and I will donate the money to charity. Okay, and that's about it. Right, if you got this far and you're watching it still, please give my video